Good morning, investors and traders. This is Naim Aslam live from Dubai. So today we are going to look at the potential in the market in terms of buy and sell zone, because obviously what we have looked at yesterday is this massive sell-off in the stock market. Now the question, of course, is if there is an opportunity, because the Dow Jones dropped well over 900 points. This is what we are going to discuss. My name is Naeem Aslam. I come with a wealth of over 10 years of trading experience. During this period, I have worked as a hedge fund trader for Bank of New York Mellon, Bank of America, and currently working as a chief market analyst at Evertrade. And on this YouTube channel, we will be discussing opportunities for investors and traders on a daily basis, providing a summary of what happened in the market and where the opportunity is. Now, yesterday's sell-off was primarily driven because of this surge in coronavirus cases. Investors are very much taking things out of context, and then they believe that, okay, these surge in coronavirus cases are going to get really out of control. And that is pretty much the perception is in the market, and then they will have a major influence on the market. On one hand, they are correct in saying that, because the global economy, or the Eurozone's economy, or the UK's economy is already in a fragile state. So imagine a boxing fight. Imagine that someone is already beaten down. Any further punch is really going to draw more blood. So this is exactly the same situation over here. But the difference is that this particular punch, or these particular punches, are not as powerful as before. Because at the beginning of this year, the situation was very different with respect to the coronavirus. We didn't understand the coronavirus. We didn't know what to do. Now, yes, the national lockdowns are coming back, because yesterday we witnessed that in France, and the CAC index, which is the stock index for France, dropped well over 3%. But these restrictions are not as strong as they were before, because schools and some of the non-essential shops, or just let's just say economic activity, is still there to a larger extent. And then plus this lockdown is not going to be that long as we've experienced previously. So with that in mind, investors, the bigger institutions, they already kind of knew about this, and they already know that, okay, look, this can happen. And then they're already expecting some slowdown in economic activity, but they're not expecting any major influence on the GDP, which can really drag the global economy to the downside. So in very simple English, or in very simple terms, what I am trying to say is that the current sell-off is an opportunity for those traders who can stomach a bit more risk. Now, whether you can start buying them now, that could be an opportunity, or you can continue to wait. But the thing is that it is now that we are facing the most amount of bad news in terms of a stock market, which is pushing it higher. Today, when I look at the European futures, when I look at the European markets, I see that there is already some sort of a recovery. The more important thing from here is that the hospitality sector, the airline stocks, the hotel stocks, they are massively down once again, and that is where the opportunity is. So you can look at stocks like Rolls-Royce, Boeing, IHG, which is your hotel group, Marriott, Ryanair, EasyJet. In America, you can look at American Airlines, United Airlines. These are pretty decent stocks. And in terms of today only, we have the tech earnings coming up. So what you got to focus over there is Facebook, Amazon, Twitter. Now, what is expected, or what you got to look at, is the impression rates, meaning how are engaging the platforms are with respect to Facebook, with respect to Twitter. Because the more impressions they are going to get, that means the more revenue they can really get out of their advertisement. So that's pretty much it. But just to finish off, one important event in terms of a forex market which is taking place, and that is the ECB. The European Central Bank is expected to announce more support for the economy, and investors are expecting, because of this support, it will bring more weakness for the euro against the dollar, meaning more sell-off for the euro. But it may not happen, because as the ECB has already put the interest rate at a rock bottom. I mean, they're already in a negative territory. So a small increase in asset purchase program is not really going to do that, as long as the bank doesn't indicate further cut down in the interest rate. That's all for today. See you guys next time.